Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. So the next webinar is live Forex market review. So we'll get into that momentarily. Before that, can we please everybody read through the disclaimer? If you're on our YouTube live stream, I cannot see your chat, but I've given you the link so you can join us. For those in the webinar, you can use the webinar chat or the question and answer box to talk to me. So we'll just read through the disclaimer before we move along. And while you're reading through that, we are heading into Easter, so the market may get a bit slow tomorrow and on Monday. Doesn't have to get slow, but it is a holiday season. All right, we'll move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. I'm a full-time Forex trader. Been trading now for almost 20 years now in the Forex market, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. And Jamie, I see you on there. I think you may have sent me an email today. I think it may have been you. Well, it's definitely from Jamie. So for those who are on, welcome. Now, if you want to connect with me through the week, you can connect with me on the website, acy.com, go to the market news tab, or our YouTube channel at ACY Securities Australia. If you want to connect with me personally, my Linktree page is there where you can get my social media if you want to connect with me. So there's that page. Hi, Jamie. Hi, Raina. Hope you're all well. Now, if you want access to the chartlets and templates, I know, Jamie, you contacted me before. Just contact Nathan. He's got the file that you can download and everything should be in there. And if you have problems setting up, he should be able to set it up for you on a phone call. His details are just going in the chat now. And all right, I see what you're saying. I'm not quite sure what the rules are. I thought that anybody came to the webinar can get access to the chartlets and templates, but I don't make the rules at the office. So I know if you want to get access to them, contact Nathan. He may have a few rules around how you can actually get access to all the stuff that we do in the webinars and handouts. So there we go. I don't personally hand it out, so you'll have to speak to Nathan and see whether he can be flexible or not. So I'll leave that with you to have a conversation with Nathan again. All right. Let's get into the news first up. So as I was just saying, we are heading into the Easter break. And news coming up so time shown here at Forex Factory is my time, Queensland time. So we do at 10:30 p.m. for Canada have GDP month to month, US final GDP QQ, unemployment claims from the US. So it's going to be a little bit volatile through that period at 10:30. And then at midnight, we have the US pending home sales and the revised UOM consumer sentiment. So a few things that can definitely drive the market. And then tomorrow is a holiday, but the thing with the US is even when we have public holidays, they still release news items. And whilst it's a public holiday, the market is still open in terms of the Forex market. So news is still being released and it can still drive the market. And even Fed Chair Powell is working on Good Friday. So he's doing a speech at 1:30 Saturday morning. And we've got the core PCI price index at 10:30 p.m. Friday evening. So whilst it's a public holiday, if you're a trader, you've been trading a few years in the Forex market, you'll start to realize that while there may be public holidays, but the market's still open, there's still news announcements coming out that can affect your positions. So you just need to be aware of what can still affect you in the holiday periods. But often Friday, Monday can be a little bit quieter because people are on holiday, traders are on holiday, okay? All right, so with that in mind, let's get to the charts now. We are moving up on the dollar index. This is the dollar index in front of me, day chart, moving to a new high for the most immediate move. So opposed to the US dollar moving down. So uptrend here on the daily and the weekly charts putting in higher bottom to a higher top. So we're probably coming up to test this weekly top up here at 105.02. So in general terms, I would have that expectation. So then we're going to get the opposite kind of scenario on pairs to the US dollar. So the likes of the Euro dollar, pound dollar, Aussie dollar, New Zealand dollar were moving down. Dollar Canadian, dollar franc, dollar, I would say dollar Canadian, dollar franc will be moving up. Potentially, yes, the dollar yen will be moving up, but it's at very high levels at the moment. So it might not move up quite as aggressively as we're seeing the dollar index here. As well, the dollar index is 50% makeup of the euro. Okay, so whilst that's moving up strongly, if the euro dollar is moving down strongly, then it doesn't mean to say that everything to the US dollar is gaining. Okay, you can get a bit of a mixed equation when you're just looking at the US dollar. Yeah. All right, S&P 500 has had I was looking for a nice decline. We've only had a very minor decline at the moment, so it's continuing its uptrend. Further higher bottoms formed here. Personally, at such high levels, I want to buy a dip if I was wanting to trade the S&P 500 just because it's so very, very high. You know, you're at the all-time high here. So you have to decide if you want to be buying at such high levels. You could be looking to the 4-hour chart if you still want to engage at such high levels and look for a 4-hour pullback. Draw a fib across the most immediate 4-hour range and look for a 62.79% retracement within the overall trend. Okay, so if you're prepared to engage at such high levels, that's how you can try to buy a dip just based on the 4-hour chart. So assuming that's going to have a dip, then look to the 62.79% zone for a 4-hour high bottom to form to continue up. All right, let's get into the euro. So of course, we've just been looking at the dollar index moving up. This is at the bottom of the day. So if you're not already in today, you've probably missed your opportunity to get in for the day, because I don't personally sell at the bottom of a move. We have, early in the day seen, a trend line breakthrough here around about the start of London, start of Frankfurt, London here. All right. And that would be in line with the day chart trend. So let's just go to the day chart. Let me just get rid of this fib I had this fib drawn in on Tuesday, which was across Friday's range. And I was saying, would we be able to take out Friday's high or not? And ultimately, we started to fail at 79% retracement later in the day on Tuesday, and we've been trading down ever since. So most pairs will only been trading up within Friday's range, and then now we're to a fresh low this week from last week. So to the day chart, we're just negotiating this area of support here, breaking this low here. Out of these two lows, if we're going to have a bounce back up as a rally, I would look at this. This is the most recent low formed and then broken. So if we're going to rally back up, I would look at this low here at 108.01. And this is in a downtrend. So are we long-term coming down to the longer lower level of support here at 107.23, which is only 60 pips away. It looks a long way on this daily chart, but the ranges have been quite small in the euro dollar, so it's only 60 pips down to 107.23. All right, so personally, what I'll be looking at is we're going to form a range today. This is the high of the day at the moment. I would be dragging a fib down. I wouldn't be trying to sell the bottom of today's move when the green pivot points, where we'll often find support to bounce back up, is keep dragging the fib down to the low, wait for this to have a retracement back up to the 62.79% area, or at least look at these old levels of support. I'll just put in the 108.01 level. All right, and we've got the figure there at 10800. If this substantially declines today below 10800, So maybe we move down, say 50 pips below there today. Certainly tomorrow, look at 108.01, 10800 here to be resistance tomorrow to continue the move down. A level to look for to sell down from. If we rally today, let's say over the next few hours, I would look to the 62 to 79% zone up here for a rally failure. Can you see it turn over? Euro yen. Here was where I was looking at on Tuesday. I was asking the question, would we test and then hold at 164.29? That's this area over here. So last week we broke above weekly, monthly resistance. We fell below, had a bounce on this support high. That area became resistance, and then we're moving down from it. So this is probably coming down to the next major level of support down here. 160, 186 over maybe the next week. That's what I would anticipate. So then I would look for opportunities for, this to come down, intraday to come back up now and test. This was 163.51. That was an area of support early in the week. Now that we've broken it, watch it to be resistance intraday on a retest. But two highs in actual fact. Either one of those areas could be resistance on a rally. I would be dragging my 4-hour fib range down. Drop to the 15. So that's the high of the day. Keep dragging the fib down and look to the 62.79% retracement area. Look to sell a rally. There was a nice failure earlier in the day. Nice trend line breakthrough here after failing at the central pivot point. But we can't go back in time and trade that, but that's just to show you where you could have maybe started to look to engage. All right, so I'll allow it to have its next rally. And as I said, we've had a false break of this high over here. We might be coming down into this zone over the next week. 160, 186. That's what I would anticipate. There's the 4-hour chart. Is on the 4-hour chart, look for, it's going to go down, rally, down, rally. Watch for price action to do that kind of price action. And look to sell a rally. Don't be selling the bottom of a move. All right, euro pound. This is the area I said watch on Tuesday, so nothing's much changed from my general analysis here. There's the daily uptrend. It's pulling back to the 62% level. So 85.56 down to 85.44 is the zone to watch for intraday support. Can you see you're set up to buy on a reversal, maybe on the 15-minute chart in that area? Just looking like we may be turning around right now. You can monitor. There's a trend line. We get a close above the break of a trend line there. Maybe that's the bottoming out of that pair today to move back up the range. All right, getting into pounds. It's just breaking below 126. All right, today charts. I was looking for a higher move up this week, but I did say it's either going to stay within the range of Friday, which it did, or it's going to move down, or it's going to move up higher to within the range of last week. But that was Friday's candle. Monday, Tuesday was trading within that range. We've put in a lower top here now on the day chart, and we're obviously trading below this area where we bounced last week. So in all probability, if nothing changes, the trend, we're coming down to 125.18 to test. All right. So we want to look to sell a rally. At the moment, we're trying to break below this area that's been acting as support. If we get a nice close below that today, then look to that area to be resistance the next trading day. All right, that, we could come back up to retest today, but what I would be doing is drawing a fib on the 4-hour range, keep dragging it down as price moves down. All right, keep dragging it down and then look for the next rally. All right, showed you a rally here earlier in the day. If you had this fib drawn in, it came up to, this is what you want to look for. We look for the 79% level. Sold at the 79% level. Stop just above here. You've been making a nice profit now. So you need to look for the next opportunity of the market doing that. Don't be selling at the bottom of the move because you're getting close to the bottom at the moment. All right, if we don't rally intraday today, tomorrow, and let's say we maybe get down to 125.50, then tomorrow's rally, whenever it comes, look to 126 here to be resistance. 125.59, the daily support level it was. Today, though, if we rally, just keep the fib drawn in across this range at the moment and look, for price to come up to the 62.79% area for a lower area to form. All right. When I'm doing my analysis webinars, it's great if price is in the perfect area when I'm coming on, but price isn't often in the perfect area. It may have already moved. Earlier in the day, it was in a nice area. Right now, you're in the profit-taking area of the move. So keep dragging the fib down, wait for the next rally. Pound yen. So on the day charts, we've had a false move above here because it's like the euro yen. This area is becoming resistance. Said on Tuesday, watch this. I said if we couldn't have a nice close above here, we could be holding here to move down. For our chart has been showing you now bottom, lower top, lower bottom, now a lower top. And if you saw that on the 4-hour chart, that was a lower top to lower bottom, draw a fib in. I personally would have been looking up there at the 79% level, overlapping with that high. Didn't quite get there, but it's failed in between the 62-79% level, and it's it's a little bit late in the day now to get in. You needed to get in when you saw the trend line break up here. So now it's in all probability going to be coming down to, we've had this move down up to in between the 62 to 79% area. That's why I'm always discussing that area to watch for a rise to go back to, because that's often where it's going to fail. I'm generally just watching the 79% level because it's the highest level, so it offers me the least amount of pips to risk if I put my stop above here. And then if it does go my way down to the 127 extension, it offers me the best reward. Okay, so that's how price is probably going to do its thing. But really, you want to be getting in the early phase of the turnover, which has already occurred. And we're getting into the latter third of the move here. So again, assuming the 4-hour trend is going to hold its downtrend over the next 24 hours, you want to look to the next rally to occur. So allow it to break this low, then start drawing a fib across this range that it's forming at the moment. So draw a fib in. Once we break below this low, start drawing the fib in and look for the next rally to come up to the 62.79% area, and then look for the next opportunity to watch for price to turn over and move down. All right, don't be chasing the bottom. If you want to get real cute, yeah, they're obviously micro. If I draw them in here, there are micro rallies. All right, so you could look to sell the next micro rally, but you're in the latter end of the move. The start of the move was up here. You want to get in at the start of the move. If you can't get in at the start of the move, wait for the next rally to occur and then get in at the start of the next move. All right, now just looking at the day chart. There's the major range on the day chart at the moment. So we may well come down to this old high, overlaps with 62% level at 190.04. If we get down to 190.08, that area could be a very strong area of support then to put in maybe a medium-term bottom for a turnaround. So whilst we are seeing some movement down at the moment, once we get to the 62% level of that major range, that could be where we bottom out. So you just need to be aware of where we could bottom out. Don't just keep selling every rally, because once we get down to 109.08, there's a high chance that could put in an interim bottom to then start to move back up. So do monitor that level. All right, Aussie yen. I did say last Tuesday, if we couldn't hold above 99 in Wednesday, I said if we fail at 99 on Tuesday, so we were trading above, but I said if we fail above and move back below, watch 99 to be resistance on Wednesday. And lo and behold, on my 50-minute chart here, there's the 99 on Wednesday. Trading down once, twice, 3 times before then, of course, moving down. So when I'm doing my webinars, sometimes the level that I would trade, I'm giving you it the next day. So hopefully you're grabbing these levels the next day, because that was one level I gave you on Tuesday. All right, just going to the day chart. We're just coming down to a very good level of support at the moment. And you can monitor that level to be support. 96.891. So if we do see an intraday turnaround at this level, this could well be support to move back up. We're just coming down. What is happening is we false broken this major high. It's become, we went above, below, became resistance. We've broken below this area now, down to this area. If we hold here today, expect that we will probably come back up to there. And then do we break down? If we come back up to 98.58 and move above, then this could be, a medium-term bottom to come back up to test 99.05. So what's happening at the moment is the 4-hour chart. I had this drawn in on Tuesday, so we may well come down into this area to feel this imbalance that happened last week. This was where we started everything to move up. And I said we often come back to feel the imbalances formed from the run up, and that's what we're doing. Now, we most definitely could hold at this area and trade back up to the 98.58 level. Now, the structure on the 4-hour chart at the moment is most definitely down. And you might not want to go against the structure you're seeing on the 4-hour chart. But at the moment, like I've been saying on other pairs, you want to sell the rally. You don't want to be selling into support. You want to be seeing this come back up to maybe this level, the 62 level here, and then look to sell a rally for the next move down. Because the current move that we're seeing right now down is coming from, there was a minor top here, we moved down, we rallied up. So we've had this kind of structure going along. We've had a 79% retracement here. And we're down into the 162 extension. So we're in the profit taking phase where we often will then bounce up and put in the next rally. All right, so don't get caught just selling here. It's fine if you sold up here and we break below here because you're already short. But if you're not already short, then you have to wait for the next rally, in my mind. Or you can be aggressive and look for a buy here. So if you wanted to be, I can get rid of my markings. If you're more bullish on the Aussie at the moment, on the Aussie yen to the 15, this is rather negative at the moment. I'm pretty sure the Aussie's broken below 65. It's down at 64.85 at the moment. So the flow against the Aussie dollar, Aussie yen is very negative. So it would be a brave man or woman to kind of go counter trend, I think, the daily trend that we're seeing at the moment. However, this is strong support. You're in the green zone of the pivot. So you could look, if you want to be aggressive here, if you've got much more of a bullish approach to the Aussie yen, you could be looking for, you know, some form of trend line break to form here to trade back up to 96.58. And then what happens there? Does that hold to be resistance to move back down? Personally, I don't generally do that. If I'm seeing a very dominant structure forming to the downside at the moment, quite clear on the 4-hour chart, I'd just be waiting for the next rally, however and when that comes. And then look, you know, I'd probably look at 98.58 at the moment. Yes, it can come back above the broken level. And then I'd look at the 79% level up there at 98.77. All right. Quite simply, you know, yesterday's trading range here on the Aussie, just so that you can, you know, there was yesterday's high. There was yesterday's low. You should be able to start mapping this out yourself, and then you can get on these trades. It went down, rallied up to 79% of yesterday's range, just a fraction above. You could have put your stop above yesterday's high. Selling here, and down it came. Or you could just have been waiting for some form of trend line break. Getting in here, stop above here, and that still would have worked out nicely as well. So showing you how you could have gotten in, how you could have been assessing the market. So if you just take the same analysis day in, day out, you're going to start to see those rallies occurring intraday to 79% level of yesterday's range. And hopefully you can get on top of those reversals intraday. All right, so we could be having a serious reversal on these, on the Aussie yen, especially if the Aussie dollar is going to start to want to hold below 65. So to the Aussie dollar. All right, today chart. Well, I just want to go to the monthly chart because I've been saying this all year. That we are lower top to lower bottom to lower top. Are we going to be coming down like so? It's been a little bit messy in here, holding on top of a bit of weekly support. But I've been taking the bias of trying to sell any rally that's been coming around in line with that trend. So on the day chart at the moment, I did get short up here last week. This day here, when we were back into this area here. Previous week, so this was last week, the week before we were holding here 4 days at this area. So when we came back up, I got short at 66.07. And because, just squash this in, the monthly highs here, the monthly lower lows there, that's the next lower monthly high there. I'm looking for this to come down and test this low down here. So I've got my position now at 66.07, I think I'm in. And if we can get down there, that's going to give me round about 330 pips, give or take. All right, so we have some areas of, well, there's lots of areas of support here that the market's been sitting on top of. And we're coming into the next area of support here at the moment, 64.85. So naturally, this low here, we may have a bounce. Might just get, these are old levels from the weekly chart. I might just put a line in here on this more recent low here, 65.08. Because if the sellers are now in control, today we're breaking below 65.08 and then 65.03. The figure 6,500, and we might get a bounce in this area here. That's 64.85, 64.47. Just a natural bounce because there'll be some buy orders there at the lows. All right, so this isn't where you want to sell. At the moment, then you want to be looking at your 4-hour chart. And we're drawing a fib in. It breaks down through there a bit. Keep dragging the fib down. In a perfect world, it'd be nice if it came through this area, like so. And the 62% level overlaps with the broken area of support there. So we come down today. We have a natural rally back up. And then I would look at this area. In this area, we've got 1, 2, 3, 4, 5, 6 4-hour lows. Those 6 4-hour lows are where people have been buying. So whilst people, yes, can have stops underneath those lows and exit their trades, if they're larger traders, maybe they haven't gotten out of their positions yet. They maybe think that this area here can't break and price will come back up and their positions will move back into profit. However, if we get a significant sweep under here, then when price comes back up, those that are long here in bought positions, so in this area through here, will become a sell zone because this is where people who are long will want to get out. They'll have if price comes back into this area, traders will want to get out of their bought positions and they'll need to sell. So that area will become resistance then to continue the decline. All right. That's assuming that we get a bounce, but that's what, if you're not already in, then and as well, what's been, just the nature of psychology here is price rushed up, came back. So the buy side of the market thought, okay, we're holding here, but then the next rush up doesn't even meet halfway up this range. Halfway is about here. So this is what we call a dead cat bounce. Comes back in, we get another lower bounce, and we've broken through. So I'd anticipate we're going to come up and then further decline. All right. Let's get into the New Zealand yen now. All right, New Zealand dollar is dropping as well as in line with the Aussie dollar. So the New Zealand yen is dropping through this area of support. And just go to the day chart. This old area is being resistant. So now we're coming down to the 79% level of this overall run up. Now, the bigger trend, the weekly trend here is actually, well, just forgetting this price action here that's been occurring over the last 2 weeks, we're going up to a higher top. Then we come down, but what we've actually done over the last 2 weeks is put in a minor lower top here. So this is actually looking a bit negative now. If this just came down week by week by week without bouncing and then further making a fresh low, then I would think maybe we're going to hold at the 79% level. But what's happened here is, if we just, we'll just draw it to the side here. If we'd have moved up and then just come down 1 week, 2 weeks, 3 weeks, 4 weeks. But what actually happened is we came down 3 weeks, we had a week up, and then we've gone down. So we've gone 3 weeks down. If we just went 4 weeks down to there, I would have thought, okay, that's a buy level to move that way. But now that we've had a week up and then a week down, it's kind of making this kind of structure. So we may well be on its way down like so. So it's looking a little bit more, what was looking positive last week, maybe midweek, is looking bearish now. So whilst, yes, we could hold at 79% level, I think that really isn't worth looking at. You want to go to the 4-hour chart like I've been saying on the other pairs. There was the last bounce, 50%. We're almost at the 162 extension now. You want to now draw your fib from that lower top down and look for the next rally, okay, in that downtrend. We could well be moving down back to the day chart. We could well be moving down to this area of support or even this low down here. But this area is this is a significant weekly top here that we got some support from there. So that's the area of support next to worry about if you're short. All right, so on the 4-hour chart, keep dragging the fib down, wait for the next rally. New Zealand dollar. All right, this is how I drew it on Tuesday. I said watch for price to come up to the imbalance, 79, up to the imbalance in the 79% level. So, my perfect zone was up there, didn't quite get there, but it came into the 62, 79% level, and then it's moving down. So we're getting a clear breakaway now. I was hoping back up to the day chart, this low here, I was hoping we're gonna on this day come up to tag that level. We didn't quite get there. Or from a technical perspective, that would have been a great level to trade at, but price never got there. All right, so if you're looking to trade there, well, you miss out. But just generally now, as we're watching price action, the fact that it didn't get up to that low point just means that the sellers were keener to get into the market and sell it, which is telling you that this is very weak at the moment. And like I was showing you on the Aussie dollar, this is a monthly lower top, lower bottom rally, and I'm expecting this to come down like so. All right, so don't want to be selling at the bottom, like I keep saying, don't want to be selling at the bottom of the move. Go to your 4-hour chart. There's the most immediate 4-hour downtrend. Look to sell a rally. If we bounce up from there today and we don't really go any further down, last week's low, this is that red dashed line, lines up the 62 level at 59.89. Could even get up to 50, even up to 60. So the figure, right through the figure yesterday. Let's just drop this to the 15. From last week's low, which is 59.88, up to the, get the right tool, up to the figure. This area would be a good area now to watch for the next rally. The reality of today's price action is we just got above the figure today. So the area that I've just drawn in today, after we moved down here, became the sell zone, the sell area where the market started to turn around in. So that for me still would be the, watch that area once more if we come back into it. All right. Looking for areas on the market, on the pair where if we rally again, where's the very obvious area to watch? Very obvious area would be the 6,600 level. Dollar Canadian. Now, this did actually perform, like I said, on Tuesday. I said, watch for this to come back up to the top of the range and fail at the 79% area. Now, it did fail, but now, of course, we're getting a failure of the fail. So on the day chart, let me just... We are in a range, okay, but we're maybe going to break out because we're seeing US dollar strength coming in across all the pairs. So when you're seeing a range like we're seeing at the moment, and of course we're testing the top of the range, if you're seeing all the other US dollar pairs sinking, then this range bound environment that you're seeing on the dollar Canadian, whilst yes, it could still hold, there may be more of a chance it's going to break above. All right, maybe a less high probability trade now at the top of the range when we're seeing all the other pairs to the US dollar declining. It may well still fail at the top of the range, but what I did say on Tuesday was watch for, I showed it over here. We had top of the range drop, 79% rally to move down. I said here, watch this to decline. Does it come up for a 79% retracement? So if you sold it at the 79% retracement, which is here, stop above the high. We have sold down, so get your risk out. And of course, now it's coming up. So that's why I'm saying it's putting in a higher bottom here, higher top on the 4-hour chart. It's probably maybe going to break above. However, so this is maybe a trade that's failed, but hopefully you've got the risk out. So it's just a break-even trade. But that was a perfect, that's how I said that it may occur, come up to 79% level and fail. So, I mean, you could have made some profit down there. Hasn't obviously traded back down to the bottom of the range, but not all trades are going to work. But if you can get in a trade and get it to break even, then it doesn't work. It's not a major drama. Now, with the US dollar getting stronger, we may well see this breakout. So what you want to be looking at is what has been resistance, which is last month's high here, 136.06, is over the next 24 hours or so. And DTL, you're saying in case we get positive data from CAD. Yeah, if the data from the Canadian GDP is positive, well, this could drop. But of course, if the data from the CAD GDP is negative, well, this can go up. So, one of two things is going to happen at the top of the range, where they're going to break out or we're going to reverse back down once more. So you're going to have to watch to see what the 4-hour candle does up here. Do we obviously break above? If we do, over the next 24 hours, watch then for a pullback to this area to be support, to move up. Or, of course, if we get a 4-hour rejection in here, then of course, then it opens up the question once more. Are we reversing once more at the top of the range? All right. So the question is still there. I mean, we could be selling here right now. Stop up here, waiting for this to collapse back down to there. But you may, I think, want to wait past the Canadian news now and then see how price sits. So the big question is, are we breaking above or are we going to once more hold? You can be patient, because if we once more fail here, then it may well simply do the same kind of price structure. It comes back down. then comes up to a 79% level, and you look for that to form and then sell for the move back down the range. All right, so you're probably going to maybe have to give this some time to work out what it's doing, and then pick the side of the market that's showing its hand. All right, dollar franc. Can't get a pullback on this pair, so what I was looking for is not happening. It just keeps moving up in line with the US dollar strength. It's coming up to the next area of resistance at the moment. So as a pair at the moment, it's not ideal because we can see where the trend is. But we don't want to be a buyer into resistance. And of course, this could be an area where the market then holds at to turn around. So I would just be patient with this pair at the moment. What is going to happen here? Are we going to hold? We're obviously coming into an area of resistance. Most recent over the last month or two, resistance is here. So you could be looking for a failure here to trade down. Or you want to see, in a perfect world, this is my weekly chart at the moment. So this is a strong area of weekly resistance to the daily. We're at the base of that area at the moment. Did show a rejection yesterday. So, and we've had one, then we had a rejection here, then we broke above. So we've had 1, 2, 3, 4, 5 days in this upward move overall. We don't normally go up many more days than that before at least having some relief. If I wanted to trade this in line with the trend, I'd simply want to see maybe 1 or 2 days down, first of all. Let it get support to turn around and then assess, okay, is it in an area where I'd like to look for an opportunity to buy, to then run up to try and break through this area. All right. It would need to prove that we're holding and wanting to maybe have a significant reversal before looking for a reversal, I think, because this is in a very strong trend at the moment. All right, we're definitely getting US dollar strength coming in the market for sure. So I don't know if we want to be going against that at the moment. Dollar yen. Now, Tuesday, I had this drawn up pretty much like, I think, something like this. So this is your support zone from this area of broken resistance over here. This is your resistance zone, the 2022 high, the 2023 high, and the most recent price action that was forming here. All right, and last week's high. Don't know whether anybody got short up there. I actually got short at last week's high. I put an order at 151.85 and price came up, but it went against me about, I don't know, 10, 15 pips, however much it went up. And I'm short at the 2022-23 highs. So I'm short at these two highs. Now it may break through, but at the moment, it's not. And we are getting a little bit of a shift, from monetary policy, US to Japan. US is maybe saying we're going to get a cut in June, time will tell. We've had a very, very minor interest rate rise in Japan. Are we getting a significant shift in policy from Japan through the year? We'll have to wait and see. But maybe, 2020, we have actually traded above both of those highs just, but with no major conviction. So, and, we had an outside reversal candle yesterday, and we may well come back up to the highs, the high area, I would say, back into retest yesterday's high. This whole area here, the 79% zone, we could come back into that area. That's the selling zone. to watch for failure once more. All right, if you think this is going to break through here, you know, this is still the buy zone down here at 150.87. This area here. From that low down to 150.87. That's your buy zone. So really at the moment, price is just in the middle. So you have to work out what side of the market you want to position yourself on. So I have got short from the top. So, and we did, there wasn't, I don't think anything's come out, but this drop down here, that looks like a bit of intervention to me. We may well come up and feel some of that imbalance that happened yesterday. So that would come back up to 79% level there at 151.76. All right, so if we can come back up to the start of the imbalance. I'll just draw it in. Imbalance is right about there. That's the remainder of the imbalance at the moment, because this has come up and filled some of this imbalance in here. Now, it doesn't have to come up to fill all the imbalance, but often it does, and that would get you up to the 79% level of that daily candle. So DTO saying better wait for Friday regarding the last core PCI update. Well, you can wait. I'm already short, so I'm not waiting. I said this at the end of the year. Levels to watch during this trading year, and it's the same every year, is when you get to the high of the previous year or the low of the previous year or any year. Last year on the dollar yen, the yearly high couldn't quite take out the yearly high of the year before. We go to the weekly chart. This was last year's high, couldn't quite take out that high, then we got a major sell-off. So whenever you're testing last year's major high, last year's major low, you often get lots of selling pressure or buying pressure around those points. So of course here at the moment we're at the high points. So this is where that's the highest anybody was prepared to sell at buy at last year. All right. So when you test it in the next year, if it gets tested, you should expect to get some selling pressure there. So that's why I'm selling there at the moment. All right, we'll have to wait and see what happens. All right, let's just finish on gold. And it's in the area that I said we could fail. We actually did fail. We came up here and fell down. But we are grinding back into the area. And, if we go to the daily chart, we're at the resistance high over here. We're at this more recent high that we false broke. We are putting in a high bottom here. So it is holding an uptrend here. I'll just draw it in. We obviously rejected, came down to there. Now we could hold here to put in a lower top. So gold's not ideal at the moment. We're at very high levels. We're at major resistance. Yes, the trend is up until proven different, but we're at high levels. Really, I think traders, you're either selling at that resistance level because it's a key area of resistance, or you have to wait for this to move up and through, then pull back to then wait for the next upward move after that. All right. So this is still bullish in general terms, higher top, higher bottom, but you're at resistance. So we find on the 4-hour chart, if we simply move nicely above the area. So on the 4-hour chart, if we were to, that's the last bottom there. If we come up and then do that, and you get it, you could be looking at this area to be support on a lower time frame for a buy, but we need to break above. At the moment, this is resistance here. You want to see a switch. You want to break above to become support. So not ideal gold at the moment, but it'll sort itself out one way or the other. All right, that's my thoughts on gold. All right, I'm going to wind it up there. If there's no more questions just from me next week on the webinar front, head over to the webinar page. Next Tuesday, more analysis after we get back from Easter. Then usually the first Wednesday of the month, I review price action from the previous month. What could you have learned? What patterns we're setting up? What could you have learned? There's been some great false breaks this month, and then those levels have then been tested, and we've had a break of resistance on the yen, on the number of yen pairs, and that's become a false break, and that's then become resistance once more to trade down. So there's been some opportunities this week to do that. So we'll look at what patterns have been forming structurally and how could maybe you've traded. It was a beautiful false break on the pound dollar to the upside, and then we've had a major reversal. So that's on Wednesday, and then more analysis on Thursday. So if you want to join me, next week my webinars are at 8 p.m. After next week, when Sydney goes back to normal time from daylight saving, my webinars will be at 7 p.m. So next week I'm at 8 p.m. The week after I'm at 7 p.m. So if you want to join me next week, just head over to the webinar page and register your interest. Other than that, enjoy the rest of the trading week. Take some time over Easter to have a bit of a break. Have a great Easter. Don't eat too much chocolate. And I look forward to seeing you next time. Okay. Thanks, everybody.